Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat, and Karunya Rao will be with us just shortly, running a bit late this morning. Let's get a move on with the headlines, beginning with the fact that we're unfortunately back below 11,000 on the Nifty, and that's really quite a disappointment. Energy and realty indices are weighing on the market as we speak. Indian markets are down 1% over the last week and have been underperforming Asia. FII flows have been positive, however, for the third month in a row. And given all this, the market's still facing a bit of pressure today. We're now also going to switch gears a little bit to Motown and talk specifically on that. Ignoring what the market may be doing today, Motown as a sector really seems to be in top gear. Auto sales accelerated in July across the board for most of the players, and some really strong recovery noted in key segments, which obviously vary player-wise. So that's just some good cheer coming in for them. We also have a bunch of other stocks and indexes rallying on earnings. So the Nifty Pharma has been the best gainer for the last week. The Nifty Pharma index is up more than 55% in the last 4 months, and it's also been the best July in history. So you definitely see like a key outperformance over there. They're showing particular growth in the API segment, and that seems to be driving the performance. And particularly the pharma players that are geared toward API seem to be outperforming the regular or other pharma players. Now, switching gears from pharma to banking, there's been an interesting development. Bandhan Bank, a block is supposed to be put up for sale today, and the promoter, who's Bandhan Financial Holdings, will be looking to pare around 20% of their stake. So they currently stand at just above 61%. We know that the RBI would like them to come down to a significantly lower shareholding. So there's a block that's coming up at 311 rupees per share, and that will offer around this 20% stake. And this will help, the total amount garnered rather will be 10,500 crore. So that's a large sum. And banks are raising money for either one of two reasons: complying with shareholder norms or in order to raise money. And finally, the RBI meeting will be happening this week, so a rate cut could be on the anvil. We'll be looking out for changes on the repo and reverse repo rate, as well as any further easing on the bank capital requirement norms, if there is any room for that at all. And sorry, just one more thing before I conclude the headlines. Earnings radar, key results today, you must not miss. We have a Cipla, M&M, Lupin, Godrej Group all coming out with their numbers today, so keep an eye out for that. Okay, and we're also going to get you up to speed now really quick with what's happening with respect to the COVID-19 virus worldwide, beginning with the fact that global cases have continued to rise and now cross the 18 million mark. COVID cases in India have surged past the 18 lakh mark. India's recovery rate, however, has climbed to 65.44%. The Karnataka CM and Union Home Minister now test positive for COVID-19. The Health Minister has issued new guidelines for international arrivals. Tamil Nadu CM warns private hospitals of action against surge fee. 70% of COVID centers are shut in Mumbai as cases in the slums slow down. BCCI issues SOPs to resume domestic cricket activities. Assam allows malls and gymnasiums to reopen. And finally, Italy reports lowest new virus cases.
All right, back to the markets once again. Then you have the Nifty continuing to trade below that 11,000 mark with a loss of 106 points. Sensex also witnessing a fair amount of pressure as we speak. It has lost more than 400 points in trade. Broader market holding up very smartly. You have Nifty small cap gaining in the excess of 0.9%, and mid cap index is also doing well for itself, up by 0.6%. It's the private banking space that's putting a significant significant amount of pressure on the benchmarks and on the market momentum at large. You have private banking index tank more than 2%. Nifty Bank has lost 335 odd points. Nifty IT index is witnessing some pressure as well, and NBFCs as well, which are looking quite weak right now. If I look at the top losers, most of them are from the banking index. You have a UPL, however, which is the top loser right now, losing 5.5%, followed by the likes of Kotak Bank, HDFC Life. You have an IndusInd Bank as well, lose in the excess of 3%. Reliance Industries is witnessing some pressure as well, down 2%. HDFC Bank is down 2% as well. You have IOC, Bajaj Finance, ONGC, Axis Bank. Look at the number of financial names that are there in the list of the losers. What's capping the downside? You have Metal Index, which is gaining quite smartly, up 1.2%. Nifty Pharma is up more than 1%. PSU banks are also doing well. That one is also up in the excess of 1%. So that is how the market mood largely looks like. You have a handful of gainers as well. Look at it, Tata Motors, fantastic up move on back of better than expected operating performance. You have 4.5% higher for Tata Motors. Titan is up 4%. You have Tata Steel, like I said, metals is looking very good. So the likes of Tata Steel, Hindalco, JSW Steel, these are the names that are really holding up in trade despite the overall weakness that's taking place on the benchmark index. Let's bring on board our guests as well. Before we do that, I think I'll quickly check on how the auto numbers also panned out. Largely in line numbers delivered as far as July sales are concerned. The momentum seems to be picking up quite smartly. Not only did you see a good sustained uptake in the tractor space with the Escorts as well as M&M Farm coming in bang in line with a good set of numbers, healthy YOY growth as well. For M&M, in fact, it has been the best July sales ever as far as their farm equipment is concerned. But supply chain issues is something that's still ailing the production side of the business, and even demand is a bit sporadic in nature, a bit uncertain. Even Hero MotoCorp said the same thing because of intermittent lockdowns that are taking place in different pockets across the country. But a good set of numbers, two-wheelers, good pickup seen there. Royal Enfield, more than 40,000 units sold. Hero MotoCorp 5.14 lakh units. Bajaj has done well. TVS has done well as well. From the passenger vehicle segment, good momentum. Maruti has seen a very solid uptake on a sequential basis. More than 1 lakh units sold in a month gone by. Mahindra Auto also better than expected numbers in the excess of 25,000. So largely I would say good numbers. Even CV space for that matter has done better than expected. It continues to be very weak if you compare it with the high base of last year. But largely I would say good numbers, no negative surprises. If anything, there's only an improvement or a beat on the expected lines. Kunal is here with us and so is Ashish Kapoor. Let's bring them on board. Morning, gentlemen. Thank you so much for chatting with us this morning. Kunal, now that Nifty has breached 11,000 mark on the downside, does it make you nervous? Is there something that one should be watching out for from a trading and investing point of view or for the benchmarks?
Good morning, Karunya. Yeah, I think there are some factors which are now turning a bit contrarian to the market. What was for the entire month of July and probably before that as well. A couple of factors like the Nifty IT index is now trying to go through some bit of a short-term reversal. You don't see that kind of a strength which is emerging, but I still believe that these could be very, very short-term oriented signals. Reliance Industries is one of the higher weighted stocks on the Nifty 50 as well. I think that stock also showing some sense of retracement. The Nifty unable to try and break about that 11,300 and 400 zone, which also I believe is a very important resistance. So on the back of all of that, I think yes, there could be some sort of a short-term concern that maybe the index could go through a bit of a lull phase. But then a couple of positive factors which one can spot on the markets today. First one is that the market internals today is quite positive. So look at a day like today where the Nifty is down 1%, the Bank Nifty is down more than 1.5%, but the advance decline ratio is still quite comfortably in favor of advances. Now that generally happens when there is some confidence which is still there from short-term traders. The put call ratio on the weekly options for the current week on the Nifty is now come back into an oversold kind of territory. So it's at 0.6, 0.65 levels. That could probably also result that the Nifty would probably find some key supports as now it goes to some short-term or intraday kind of tips. So 10,900 to 10,800 zone could approximately act as good support zone. So I think in that regards, the index could largely remain in a range. Dips could be bought into, and I think 10,800 and 900 is I believe the key support level for a good part of this week.
Okay, thanks Kunal for that. Ashish, coming to you for your wealth creation bets, which are the stocks that you would like to recommend for the long haul, for the keeps that one should look at the current juncture?
Yeah, well, I think markets remain in a good shape because despite all the concerns, I think the economy seems to be bouncing back much faster than expected. The recent auto numbers are an indication that normalization is coming back quite fast. So with that in mind, I think there are two stock ideas. One is Affle India. Now, Affle India is a global ad tech solutions provider. The company is doing very well since the IPO last year. The company has given very smart returns to the investor. Going forward, we feel that this still has a far more room upside. The immediate 1 year target is 2000, but if investors can hold it with a multi-year time frame, the upside is potential is immense. The company offers various digital marketing solutions, including mobile advertisements, fraud detection, data management, audience intelligence, and ad monetization. The company has two platforms, consumer as well as enterprise. Enterprise solutions, they give consultancy to various corporates on how to handle their digital marketing program. The company also has a stake of 6% by Microsoft, which is one of the largest tech player in the world. I think the various industries to which Affle is catering to, including fintech, telecom, retail, are all doing well. So I think, and the order book and the outlook is very positive. So I think this is one stock in which you could have a tremendous upside potential. And given the kind of market we are in, I think the tech companies are likely to do very well. So anything to do with tech and especially digital space is likely to continue getting good traction going forward, and Affle is certainly well poised to do well. So this is one stock idea. The other one is TTK Prestige. The company has a brand name which is a household name when it comes to kitchen appliances. They have 3 series of products: cookers and pans, non-stick cookware, as well as kitchen electrical appliances. The company has again been doing very well, much better than expected. In fact, due to COVID, a lot of people have started preferring home cooked food, and which is auguring well for this company. The company's recently the management came online and said that they actually have done much better than not only expected, but actually much better than even pre-COVID times. The company has a very strong presence and a very strong retail franchise. It has 65,000 outlets through which it sells its products. It is debt free, has an ROE of more than 20%. The stock has now over the last 1 year corrected. So I think this is a great entry point which this company is giving. And the immediate 1 year target is 7,000, which itself is quite an upside from the current levels. But again, this is a multi-bagger idea because over the last 20-30 years, this has created significant capital for investors. So I think going forward, this is presenting another multi-year capital creation opportunity for investors. So these are the two stock ideas, and a disclosure that both of them I am holding as well as I have recommended to my investors.
Okay, thanks for that advice, Ashish. Kunal, we never got your stock specifics this morning. What are you looking at?
So looking at a couple of buy calls, Varun, the first one is a buy on Godrej Consumers. I think that stock, after a good amount of sideways range, is now trying to come back into some thick of price action. So I think till last week, or till good part of last week, the stock was tottering below that 700 mark. It had even dropped to that 660, 670 kind of levels. But I think after today's comeback and the gap up move which you're seeing today for Godrej Consumers, I believe for one that the stock could restart its uptrend quite significantly. So I think it's a very interesting chart on the short term as well as on the medium term time scale. It's just that the stock was remaining more sideways, which I believe the sideways trend could be over for Godrej Consumer. So that's a buy. Targets could be kept at almost 740, 750 mark, and stop loss at 695 zone. The second would be one Ultratech Cement. Now, last week when the stock delivered result, there was a big price up move or a price uptick which happened. It was a price volume breakout for Ultratech Cement. And post that, in the last 3 days or 4 days, the stock has remained more sideways. So it's a mild retracement which you're seeing for Ultratech Cement. But when you look at it in the overall context of the chart, it's still a very bullish chart on the short to medium term time scale again. So Ultratech Cement is also the second buy call which I would be bullish upon from current levels. Targets of 4,300 and stop loss at 4,075.
Thanks for those picks as well. We're now going to get on our queries, but before we do that, we're quickly going to address the BNSN stock cloud for this morning, and we have a whole new host of stocks that are creeping in there because there's a lot of new news flow this week, beginning with Tata Motors. Now, Karunya spoke about that in length just moments ago, so I'm not going to go over that, but there's a lot happening at that counter. Then you have UPL coming in. They had a result Friday post-market. Fairly good given that key markets of LATAM and US are not performing, but still today that stock is taking a massive beating, investors not liking the numbers. Then you have a Bandhan Bank, as the promoter will be selling 20% stake at a 10% discount to CMP as of Friday. Then you have an Ashok Leyland iShares on the back of auto numbers. You have JSPL, there's a lot happening there. You have SBI on the back of its results, and then Torrent and Divi's on the pharma movements, and Godrej again, Agrovet, on the back of results. So that's the stock cloud. Let's come back to our queries. And our first query is from the line of Puneet Malhotra from Dubai, actually. So he's watching ET now from overseas. And he's got 255 shares of BASF at 1280. And he wants to know if he can hold for 4 months. So he's being quite specific. And he wants to know in this 4 months, what will the target be on the upside? So Kunal, because it's a bit of a technical question, let's bring you on board first. 4-month view on BASF, what can you tell Puneet?
You can hold on to your investments over here. I think that's, because the chart is just about starting to shape up pretty well. Last 4 months, I think the volumes for BASF has just about started to improve for the stock. So even though it's not an all-out liquid stock in terms of volumes, but then whatever volumes I can probably garner from the weekly and the monthly charts, it looks interesting. I think from a 4-month perspective, I would look out for 1500, 1540 kind of a target range for the stock price. That's where I think the first level of strong resistances come back for the stock price. And looking at the volume setup, it's high probability that the stock will probably come back to those kind of territories. So I think if you've bought BASF, keep 1500 to 1540 as a potential target range in your stipulated time frame.
Do you concur with Kunal, or are you looking at BASF rather in a different light?
No, I concur with Kunal. I think BASF should be a good idea to hold on to. Now, 4 months can be a little tricky because also depends on the market sentiment. But overall, I think company is doing fairly well, and I think if we can hold on for 1 year, the target of should be around 1700, which is a significant upside from the current levels. But having said that, the company is doing well on the various divisions, especially the agriculture one, I think should see a good traction going forward. So I think the chances are fairly high that even within 4 months, he should make some money from here. So certainly a hold from my side as well.
Okay, all right. Moving on then to query number 2. Renu Sharma writes to us from Indore. She wants our experts to suggest her their top IT picks. This is a sector that she's actively looking at investing perhaps. Kunal, any names that seem attractive from a trading standpoint or from the short-term point of view that one could look at?
Well, there are a couple of names from the IT pack which look attractive, but again, I think the idea over here is that you remember that these stocks had a fantastic month of July in terms of price uptick. So it's possible that the stock could remain a bit sideways, remain a bit choppy before they resume their uptrend. So that's how we look at some medium to long term trends evolve, because when you have some very good month for the stock prices, it tends to be that since the investors have already been on board, then the stock would remain more sideways and the volumes drop off significantly. So I think that regards that could remain more as a caveat to the immediate stock price trend. But then a couple of stocks which I believe from the IT pack which looks very attractive to me on charts. I think on the large cap front, Wipro and Infosys, both of them, they particularly look very, very attractive. Infosys has been, of course, one of the leaders in terms of the large cap IT pack, but I think even Wipro is trying to catch up with the price underperformance, not just for this last 2-3 months, but I think the period prior to that as well. So I think Wipro could be one of the few underdog large cap names which can try and outperform. Infosys has been doing exceptionally well, so that stock would outperform. But from the mid cap name, I think one stock which I believe for one would looks fairly attractive on charts and is poised for a strong breakout is Mindtree. And I think I've been very vocal about this stock as well from those 950, 980 kind of levels. Now this stock looks fairly attractive to me. On the medium term charts, there are some bullish price pattern breakouts for Mindtree as well, which could probably lead to the stock maybe trying to test another 10 to 15% upside from current levels, but your time horizon has to be extended as I explained earlier.
Okay. What about you, Ashish, from the IT index? Which are the names that one can look at investing, given that already there's been a solid run-up in many of these heavyweight names, some of which Kunal also pointed out. The last 3-4 months, we've seen a very strong uptake. Numbers have also been mostly in line with expectations. Some of them have given good commentary as well for future. So which ones are the stocks that you find attractive in terms of future growth prospects?
Yeah, I think IT certainly is one of the better sectors to bet on, and I talked about Apple in one of my picks. That would be my best bet in the IT space. Having said that, there could be other options. One, of course, in the large cap, you could always look at TCS, Infosys. They remain pretty good. Results have also been encouraging. The other one, if you are looking at mid-cap, besides Apple India, the other stock picks could be L&T Technologies. Now, L&T Technologies is focusing on Internet of Things, something which has tremendous potential going forward. The company has been doing fairly well, and being a relatively smaller company and with less volume, somehow it's not getting noticed well, so it's still available at a very decent valuation. So I think L&T Technologies could be another stock you could look at picking in the mid-cap space. And the other one could be Persistent Systems, where again the consistency of the company has been pretty good over the last several quarters. So I think in the large cap, I would go with the TCS, Infosys, and the mid cap with Apple India would be my top pick, followed by L&T Technologies and Persistent Systems.
Okay. So some interesting alternatives being offered there. Let's switch gears to the next query. We have Manoj Mehta of Chennai writing to us. Is it the right time to enter Jubilant Food? So, Kunal, I'm sure you have a view and advice on that. That can also probably involve the chart.
Yeah, I think from view, Varun, I believe Jubilant Food looks attractive. There are some price pattern breakouts which are potentially due for the stock, and it's been showing some good signs. So even though the last 2-3 months it's not resulted into a big price uptick for Jubilant Food, but I believe that with this consistent attempt towards breaking that 1800 mark, 1785, 1800 kind of zone, I think eventually a breakout could happen. But it's just that one has to wait for the breakouts to pan out, and that too, I believe, from a short to medium perspective, looks fairly attractive. So I think from a shorter term view, wait for that 1800 breakout, which I think, if I'm not wrong, is just 1% away from current levels. So once the stock gives that confirmation of a breakout, closes above it, then I believe you could be in for a short term momentum. But if your time horizon is medium term to long term, then I believe that you should be looking to buy the stock at every dips. It has a tendency of giving you that odd 5%, 10% correction every now and then after a decent upside. So you can either buy it on rises or on breakouts, or buy it on dips, because the long-term charts as well are fairly attractive for Jubilant Food.
Okay, so Kunal's positive. Ashish, how do you see Jubilant Food works?
Well, I think it is a buy from my side because I think as normalcy comes back, the confidence for takeaway foods would keep on increasing. The quarter four results were also not bad. Of course, the sales growth was muted. It was just a 3.8% year-on-year growth, but that was also not bad, keeping in mind that majority of the quarter four was impacted because of COVID in March, COVID situation in March. And also the same sales growth showed a decline. But I think the encouraging thing was that the margins they were able to maintain. Going forward, the quarter one obviously would have an impact, but things would start improving gradually and surely. The company is very well poised because I think going forward, this quick service restaurant concept is something which is very favorable with the millennials as well as the new generation. And Jubilant Foodwork is very well poised. The company has expanded very well, is doing fairly good to keep their margins high as well as expand into new territories. So I think overall, the stock looks a very good opportunity in these subdued times to enter with a long-term perspective. The immediate target could be 2000, but yes, on a year-on-year time frame, this company has good potential on the upside. So I think it's a stock which I can recommend as a buy at the current levels.
All right, Ashish and Kunal, many thanks then for joining us and helping our viewers out as always. Moving on to a stock that's flying in trade. I'm talking about Tata Motors delivering their numbers on Friday evening. Operating performance definitely came in as a big surprise, given that the street was expecting the company to post an EBITDA loss. They managed to finally reap the benefits of all the cost rationalization and strict cash conservation strategies that the management has been undertaking for so many quarters now. Finally, it has paid them off well. You're looking at some positive notes trickling in from brokerages as well this morning. CLSA has upgraded Tata Motors to a buy from underperform. They've given a target of 135 rupees a piece. They say that Q1 results scorecard, it was a beat across all the segments. Focus on cash and cost saving reflects in the numbers. The management maintained their FCF guidance. They've raised cost reduction targets for JLR as well. Equity dilution, however, remains a bit of a risk. PV stake sale could be a positive surprise. Do remember that the board has also approved having off the PV business into a separate entity. This was something that was announced by the company in March this year, and there's been further progress on that move. So the street is looking at it as a positive development now that both CV and PV businesses are set to become separate entities. Let's see how that pans out for the company. But for now, the numbers have gone down well with the markets. They've all given it a thumbs up. The stock is up 4.5%. Taking a break here. More management interactions and stock-related updates when we come back. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. We're in the thick of the earnings season, so let's chat with the management of Credit Access Grameen to talk about how Q1 transpired for them. It's been a mixed quarter if you really look at the numbers. NRI has risen. PAT slid a tad YOY. Asset quality has been largely stable if you look at how the sequential performance has been. Uday Kumar, MD and CEO of Credit Access, joins us right now. Mr. Kumar, thank you so much for chatting with us this morning. If we talk about the results, NII has shown a healthy growth, though PAT declined 22% YOY, mainly perhaps on the account of higher provisioning. Would you take higher provisioning for upcoming quarters as well? If you could shed some light on that, share with us the profit growth that you foresee for the upcoming quarters. What should we expect and what should your investors expect?
Sure. So this quarter is quite good actually in terms of net interest income as well as the entire growth, YOY growth. But because we took a conservative mode on the provisioning, because we know that there will be some impact, we should be better protect the future. Already together we already more than 4.14%, 4.14% provision we have provided to ensure that our future is secured. So we may not need to do any provisioning in future, but we will see it all. I need to put a disclaimer today, sitting in the uncertain position of COVID, how long it will go further, whether it is 1 month, 2 months, or 3 months. If it is 1 month, fantastic. 2 months, little difficult. If it is 3 months, more difficult. So we have to go through the process and see. But as we stand today, we find we have strengthened our balance sheet by providing sufficiently well in advance, and this should be sufficient for our future requirement.
Since you're here, we must talk about the moratorium trends as well. What percentage of the consolidated loan book is under moratorium, and by when do you expect the collection to reach pre-COVID levels?
Sure. See, on a consolidated basis, about 30% of our book is under moratorium. In case of Grameen, it is 24% is under moratorium, and in case of Madurai, it is about 32% is in moratorium, which means about 28 to 30% is under moratorium, total moratorium. But we assume that from 31st August, we will, or 1st September onwards, our collection to improve because moratorium ends on 31st August. We believe by September end or October, we should be back above 95%, and by December, we should be normal at pre-COVID level as we stand today. That is what our assumption and confidence.
All right. So, and could you share with us the asset quality trends that you're observing? And everyone's expecting NPAs to spike in the next 6 months. So from your moratorium book, how much do you think could potentially turn bad?
So as you see, there is no change in asset quality between March to now because we have moratorium is there. We agree that there will be an increase in the moratorium, increase in the asset quality. But we are not very pessimistic on this. Our asset quality should not be worsening. Beyond the equivalent of demonetization. So we had asset quality loss about 3.9% to 4% during demonetization. We expect the loss will be within that. In this, considering the moratorium support, the funding support to us, the many supports given by government to our customers, so which overall together, we believe it will be equivalent or much less than the demonetization losses. So actually rural is doing well. We exposed to rural very heavily, and our high customer touch, our enthusiastic employees connected with customers. So we believe that our asset loss should not be more than the demonetization equivalent. So that is what we believe, and we have the confidence that we will be able to collect better and we will be able to connect with our customer better.
Okay, great to hear. That's so. And also there are still multiple states of lockdown going on depending on which part of the country you're in. Now, given that you do have a small exposure in West Bengal, and then you also have some decently high exposure in Odisha, has there been any impact of the cyclone or any such lockdowns on your portfolio?
Actually, we have near to zero in West Bengal. We have just 4 new branches we opened in the last year under Madura actually. In fact, Grameen do not have any exposure to West Bengal. It's a new branch, hardly some 4 or 5 crores portfolio, and we have not seen any difficulty there, but still we are collecting about 70% there. But it is very insignificant, hardly 4 or 5 crores, not even 0.1% portfolio of ours there. So West Bengal is actually insignificant for us at this point of time. And of course, there is Orissa, where we in the eastern part of Orissa, which is impacted by Amphan, where the collection is a bit low, that again particularly Madura portfolio there, whereas the same western part of Orissa, we have almost 80% collections. So we don't have any much, together it's about 65% collection. So little difficulty is Maharashtra because of the longer lockdown locally, longer lockdown in the district like Latur, Nanded, Solapur, like things. But still, we are able to collect about 65% in Maharashtra, which is much better as we stand today. If I keep Maharashtra out, our collection is more than 80%.
Could you also talk to us about your capital requirements and fundraising plans? What are your targets and what are the timelines? If you could also give us details on that.
See, we don't need immediate funding, but we have a requirement to reduce the promoter holding before August 21. So that is why we are planning the fundraising to facilitate that reduction of for promoter holding. We are planning between Q3 to Q4 or whatever the good marketing conditions. We have not yet decided the value and not yet decided the exact timing because we are already about 23% capital adequacy. We don't have a capital adequacy challenge at this point of time or even for the entire year. But yeah, we would find a reasonable, convenient time between this financial year. We are planning to raise some funds.
All right. Well, thank you so much for taking out the time to chat with us this morning, Mr. Kumar. It's a pleasure talking to you, and we look forward to catching up with you next quarter. That was the management at Credit Access Grameen talking about their latest numbers and trends in their business. Let's now move forward. Another stock that's in focus today is Bandhan Bank. Now, if you look at your screens, you might see it's down a massive 10-11%. Now, the reason for this is that over the weekend, we've learned that the promoter, Bandhan Financial Holdings, who owns a 61% stake in Bandhan Bank, will be offloading 20% stake. Now, at the time of the Q1 results, when we were discussing fundraise with Mr. Ghosh, who's the MD and CEO of Bandhan Bank, he said the capital adequacy speaks for itself. It's possibly the highest in the industry, one of the highest, and they don't need capital. However, there was talk of a merger between the holdco and the bank to kind of bring down his shareholding to what the RBI wants. It now seems that this is being achieved rather via direct sale. So they'll be offloading 20% stake that will bring their shareholding down to 40 odd percent. Now that will garner around 10,500 crore rupees for this Bandhan Financial Holdings entity. We don't know what the proceeds will be exactly, but the price is 311 rupees per share, which was a 10% discount of Friday's closing price of 345, and that's why it's taking a beating today. But post this, a big overhang of stake sale which was there on Bandhan Bank will now disappear. And if you look in the past, how it was with Kotak and other banks, usually that's appreciated by the investor community in the long run. So that's what's happening there today. But what's also important to get you from a different sector is that software giant Microsoft has confirmed that Satya Nadella has spoken to President Trump on buying out TikTok. And Chandra R. Shrikant now is going to join us from Bangalore with all the details. Take it away, Chandra.
It's significant because Microsoft has confirmed that it is going ahead with plans to purchase TikTok in the United States and some other countries as well. So it's said that Microsoft CEO Satya Nadella has spoken to President Trump and assured him that this will be subject to a full security review, because remember, the United States government has raised security concerns against TikTok and had even threatened to ban it last Friday. Now, Microsoft has said that both companies have given notice to the United States Foreign Investment Body, and this will involve purchase of TikTok in 4 markets: United States, Canada, Australia and New Zealand. So if the deal goes through, Microsoft will buy out TikTok's operations in these 4 countries and run it. It's not clear what the plan is going to be for the rest of the world, including markets such as India, where TikTok was banned a month ago along with 58 other Chinese apps. India is also a huge market for TikTok, where it clocked more than 600 million installs. Microsoft has also given a commitment that if this plan goes through, the data of everyone in the US will be secured, and if a copy of the data has been saved elsewhere outside the country, that will be erased from the server. So all data will be local and will be saved only inside the United States. So this is going to be an interesting battle. It pits Microsoft against Facebook, which sees TikTok as a key rival, Google, which has a big pie of the digital advertising market. It's going to be interesting if Microsoft's plans to acquire TikTok in these markets go through, but it wants to wrap up these discussions by September 15. That's the timeline that Microsoft has given, and it said that it's in discussions with TikTok's parent ByteDance for the same.
Thanks, Chandra, for that update. Back to the markets. Then earlier in the day, we spoke to market veteran Ravi Dharamshi, who remains bullish on the Indian pharma space. He also anticipates the sector to grow exponentially in days to come. Here's what he said.
I think what we need to think, the way I think about this market is that Indian breadth of the market was in a bear market since 2018. It's quite a long bear market, considering that in the past 2 decades, the longest one we had was about 15 months in global financial crisis. So for nearly 2 years, mid-caps have been in a bear market. We were beginning to recover. Post the corporate tax cut, the markets had started to recover when the COVID happened. And it was like a capitulation move. So if you look at it, the March actually marks the bottom of the market in terms of valuations, in terms of sentiment, and probably even in terms of economic growth and corporate profitability. So if that is the case, then we are just 3 months into the recovery in terms of markets. I'm not talking economic terms. And if that is the case, then we should not be so worried about the next, maybe there is a 5-10% correction lurking at some point of time. But it does not look like this is going to stop anytime soon.